Welcome everyone to the Keeping Your Business Together in a Crisis live stream webinar series. This is part 13, PPP and EIDL loan updates. We are recording this session at 10 a.m. on Wednesday, June 17th. I always say that because particularly for the PPP and EIDL update webinars, things change by the hour. Even this morning, there were new things coming to play, and I can't tell you how grateful we are for Dan King and Brian Ormsby that they have been reading, listening, interpreting all of the regulations and changes with these SBA loans. So we're very fortunate to have them. They are both COVID specialists for the SBDC, and so they're going to talk to you today about all the questions I'm sure that you have. This series is produced by the Boulder Small Business Development Center to support businesses in Boulder County, as well as the rest of the state through our TechSource program. And we're one of 15 SBDCs in Colorado. We know that a lot of people are calling in from different locations around the state and even some outside of Colorado. If you need support or have additional questions, you are more than welcome to go to coloradosbdc.org to find the SBDC that's closest to you. We provide consulting at no cost. We do trainings, accelerated programs, and connections to resources. So you are in good hands across the state. Our particular center is hosted by the City of Boulder, and we are part of a group of local, state, and national strategic partners that are here to help you now through these times and beyond. Please note we have everyone on mute, and we'll take questions at the end of the session, but you are welcome to go ahead and put your questions while Dan and Brian are talking. Go ahead and put those questions into the chat section, and Jamie, my co-moderator, is going to be asking those questions to Dan and Brian at the end. We'll try to get to as many as possible. And you will also get a link to this recording via email, and the recording is also going to be posted on our website, which is bouldersbdc.com, and Jamie will reiterate those things at the end. So I'm going to turn this over because I know there's a lot of good stuff to talk about here today to Brian and Dan. And again, thanks so much for continuing on this journey with us, and take it away.
Good morning, everybody. This is now the third webinar we have done on the PPP program. And Jamie has, we've lost everybody, Brian. It's just you and me. We'll see what happened. The ladies dropped off on us.
We're here, we're just giving you the full reign, Dan. You guys are the spotlight.
All right, good. The third webinar we've done on this, and maybe the last one, although we'll see if something earth-shaking happens and we do another one. We're not going to plan on reviewing a lot of what we've talked about in the last webinars. Those are available on the site if you want to go back and see what we said then. Most of it is still valid. Some of it has changed and has been updated. The SBA did release 2 loan forgiveness application forms this morning. We have looked at those very briefly. I don't think either Brian or I think that we're expert on all the changes that may be in there, but we do have some points that we'll point out. Basically, the 2 applications are, the one is for people who have really made no changes. If you've had the same staff on, you paid them the same, you're a sole entrepreneur, you only have yourself, you're the same person, there's an easy form that's going to be very simple for you to fill out. I'll laugh because I was going to say that the Treasury Secretary, Steve Mnuchin, had said publicly a week or so ago that they were going to come up with a new application form that would take no more than 15 minutes to fill out. Well, if you're one of those people who have had no changes, it'll probably only take you about 15 minutes to fill out the easy application form. If you have had changes, employees coming and going, disruptions to your business, and it gets more complicated. And the application that was released this morning is essentially the same. There are some changes that we've seen, and there may be a few more, but essentially the same. And that's going to take some work, and it's going to take some effort on your part. So that will be similar. So again, we're not going to go rehash the past too much. We'll cover what the newest rules were that came out of the new law that amended the original CARES, the Flexibility Act it was called. It made things generally easier. A couple places a little problematic, but generally easier to obtain forgiveness. And that's been the general theme, that since the original rules came out, they've done things to make it easier for people to get 100% forgiveness. So we will go through those things, and that's my opening solo, and I'm going to let Brian delve into some of the details.
Yeah, thanks, Dan. Yeah, as Dan said, there's 2 new applications came out this morning, so we, had a chance to read through them. But the easy application, as Dan said, does look like it will be pretty simple if very little changed in your business from before COVID to after COVID, other than having a reduction in business itself. But some of the things that changed in the new rules is one of them is the disaster covered period changed, or was defined. I think is probably best, because the beginning date was always a little bit nebulous, and the end date was a hard date of June 30th. Now the disaster covered period, and this isn't the forgiveness covered period, this is the term of when they are saying that disaster actually exists, starts on February 15th, and right now ends on December 31st, all 2020. So previously there was an end date of June 30th. That date appears to have disintegrated entirely. In my initial scan of the full forgiveness application, it appears that the end date now will be the date of forgiveness that you request. So that hard date where we were talking about, did you bring your FTEs back up to the full number, now appears that it'll be the date that you ask for forgiveness. So again, that's an initial scan of that document, and I'm sure there'll be some more information that comes out in clarification of that, and hopefully that we have interpreted that correctly. So if you have not applied for PPP, or you, if you've not applied for PPP yet, one of the things that the Flexibility Act kind of opened up the ability to reapply, but you have till June 30th. So if you've not gotten your PPP yet and you still feel like you're a candidate for that loan, then please put in your application quickly, because you are running out of time. Now you can use that period during the new disaster period, and I'm going to turn it over to Dan here in just a minute, because it kind of creates some new rules for people who've gotten their loan later. But again, the application period has been kind of extended, but it will end on June 30th, and that is a hard date. So I'm gonna turn it back over to Dan, because he's gonna talk about how the new rule has created some changes.
Yeah, that's a really important point for Brian to make. That the PPP, as originally formulated, was not a great fit for a lot of businesses. It's a much better fit now that they've made these changes, but the window is only open till June 30th. So if you did not apply and you think this might be a good loan for you now, and it might be a good loan for you now, then you should get your application in. One of the things that came out of the new regulations, and this was really didn't come directly out of the law itself, it came out of the guidance that the Treasury Department released about the new law, the forgiveness law, the flexibility law, is this date of June 5th. June 5th now became an important date. And depending on whether you received your loan on pre-June 5th or June 5th and after, you basically are under 2 different sets of rules. To some extent, this created 2 classes of borrowers, a pre-June 5th borrower and a post-June 5th borrower. The big differences are twofold, really. If you received your loan after June 5th, you must use a 24-week covered period to do your calculations. So previously it was an 8-week covered period, but now if you received your loan after June 5th, you must use the 24-week covered period or the period that ends December 31st, because some people may get funded in July and there may not be 24 weeks left in the year. So December 31st will be your cutoff period. The other thing for people who receive their loan after June 5th is if you end up not getting it all forgiven and have to pay some of this back as a loan, it is now a 5-year loan. Previously, it was a 2-year loan. Now it'll be a 5-year loan. Now, if you got your loan before June 5th, the bad news is it's a 2-year loan. If you have an amount outstanding, you have to pay it back over 2 years. You didn't get that automatically changed to a 5-year loan. The caveat there is you might be able to convince your bank, if you're in that situation, you may be able to convince your bank to change it to a 5-year loan, but it's totally at the discretion of the bank. And there's frankly little reason for the bank to want to do that. So it would be a very hard sell. The good thing that happened to you if you were before June 5th is now you get to choose between an 8-week covered period and a 24-week covered period. So you need to do your calculations. You need to figure out which period is going to maximize your forgiveness. And based on that, choose which one you want to apply for forgiveness underneath. Our recommendation is always to, if you can get maximum forgiveness in an 8-week period, get this done early, get your forgiveness application submitted, get this off your books and records, and move on with your life without this hanging out on there. I'll give a little editorialization about the 2-year term. There may be pushback on that. The law itself only says that it's going to be a minimum of 5 years. The law doesn't say that one's already on the books will remain 2-year loans. That really came out of the Treasury Department's rulings. We think it was primarily motivated by a lot of banks had written a lot of these loans and had put them on their books as a 2-year instrument. So it was going to be problematic for them to go back and change these all to 5 years. And we think the Treasury Department recognized that and so did not go back and do that. But there may be further pushback on that. I'll make one more point because it's important and it's not entirely clear. So this June 5th cutoff date, what does that mean, and how do you know if you're a pre-June 5th person or a post-June 5th person? Well, if you got your money before June 5th, you're a pre-June 5th person, so that one's pretty easy. However, if you got your money on June 5th or a few days after June 5th, you may be a pre-June 5th person. The determining factor is when the SBA approved your loan with the bank, they would have sent that bank a loan number. That's on the day they did that, that's the date that determines whether you're a June 5th or a pre-June 5th loan. So you don't know for sure if you got your money around June 5th or a few days after. You don't know for sure whether you're under the pre-June 5th rules or the post-June 5th rules. The only way for you to know is to contact your bank and find out directly from them. Was my loan approved by the SBA pre-June 5 or after June 5? So you have to, if you fall in that window a few days after June 5th, you need to check with your bank. And Brian, I'll hand it back to you.
Yeah, so let's talk a little bit about the advantages and disadvantages of the new 24-week period. So as Dan said, if you're a pre-June 5th person, then you have the option to select. So this is important for you. If you're a post-June 5th person, then you're stuck with the 24-week period. So you need to learn how to make that work for you. So if you fill out your application and you're a pre-June 5th person, you fill out your application on the normal 8-week forgiveness period, and you're 100% forgiven, then that's a no-brainer. You're gonna put that in, and you're gonna get forgiven, and it's gonna be over. If you fill out that application and you're not 100% forgiven, then what you want to do is try to figure out during the 24-week period, can I make that better? Is it going to be easier? Is a money issue? Am I not able to spend enough money, but I don't have a problem with the FTEs? then that probably is also a no-brainer to extend to the 24-week period. If it's an FTE issue where you're having a hard time getting full-time equivalents back up, then you have to look, is waiting longer going to help me get my full-time equivalents back up, or is waiting longer going to make it even harder? Because the calculation for full-time equivalent over the 24-week period is still a little nebulous. The new application really hasn't been digested to determine whether it is it going to be an average of your FTE over that full-time period, or is it going to be a restoration to the FTE count at the date of application? So we still have some unknowns there. So when we look at the 24-week period, there's still a few things out there that, you know, potentially make the 24-week period, you know, a little shaky on whether or not that's going to help you gain full forgiveness. My interpretation of looking at the new application this morning was it's going to be based on your application date. Did you bring full-time equivalents up to that date? But I don't, because I only read it for about an hour. I don't know that that is going to be the interpretation when it gets through the U.S. Treasury with their next piece of guidance. So look for that, because that's going to be very important for the 24-week period, is how do you calculate your FTEs? I think the 24-week period, it's obvious it's going to make it a lot easier to expend the funds because you have a longer period of time. However, it's pretty clear on the application that for owner operators, owner employees, that they are going to be held to a 10-week cap of their wages. So they're not going to be able to take their wages and extend it out over a 24-week period, which would easily guarantee that you would be forgiven. So they're going to cap you to 10 weeks, which should be the basis of how the loan was made in the first place. So rather than 8 weeks paid or incurred, you're just going to get 10 weeks under the new system. So again, you need to first calculate, if you're pre-June 5th, calculate on your 8-week period. If you can get full forgiveness, then get this behind you so that it's no longer hanging over your head. If you cannot get full forgiveness, then at that point you have a decision to make. Does moving to a 24-week period make that forgiveness a better option or a worse option? If it's a better option, then defer to 24 weeks. If it's going to get even worse, then, you know, take your medicine and put your application in and get it done. My guess is that for most people, the 24-week period will increase their chances of forgiveness. But the FTE count, again, is something that we have to pay attention to, because that can be a pretty hard hit if you don't get those numbers. So I'm going to turn it back over to Dan and let him talk about deferrals.
Kurt, I'll just jump in on one point of this whole 24-week period. The one class of people that it clearly helped are people who are sole proprietors or independent contractors without any other employees. Okay, so they don't have any other employees, they're just all by themselves. Under the 8-week period, it was impossible for you to get full forgiveness. The math just didn't work out. You were giving 10 weeks of payroll. You could only pay yourself at the historic rate for 8 weeks, and the math was going to leave you a little short of full forgiveness. So you were going to be stuck with a partial loan no matter what you did. Now that you can spread it over the 24 weeks, you can get that entire period in. So if you're in that category, you're going to choose a 24-week period. It's the only way you'll get full forgiveness. The deferral period really goes back to a question we had, and we were asked a number of times before, when do I have to ask for forgiveness? The legislation and the rules really had no guidance on that, and it was just up to the borrower. The borrower got to ask forgiveness when they wanted to ask forgiveness. Well, this deferral period really answered that question, because now it has set a date of 10 months after the end of your covered period. If you haven't asked for forgiveness by then, you're going to have to start paying the loan back. So now we have your answer. You have to ask forgiveness at least within 10 months from the end of your covered period. And that could be a 24-week covered period or an 8-week covered period. That's your option. But so you have to ask within that window. So why would you wait that long? Not many, if you can qualify forgiveness, if you figure out what it is, there's not a lot of advantages to you to wait that long. You should get it done and get it over with. If you're going to end up with a sizable PPP loan to pay back because you haven't qualified forgiveness, then it may be to your advantage to push that out because your payments won't start until after you ask for forgiveness. So you could potentially defer when those payments will start to a later period in time. It's a double-edged sword. You defer when the payments will start, but you don't get to extend the maturity date of the loan. So for instance, if you had a 2-year maturity date of this loan and you push this out as far as you could potentially not start paying back that loan until month 21. And that means you got 3 months to pay it all back. So they're going to be big payments when you get there. If you have a 5-year maturity, then it's a little bit more reasonable. So that's a decision that you may need to look at. We think most borrowers are, again, going to be advised to do this as soon as it makes practical sense and get it done with. But there may be a few who fall into a category where they want to wait till the end of the 10 months before applying for forgiveness. That's the deferral period. Now, Brian will talk about a little bit more about how you can spend the money and how that changed.
Yeah, so, and piggybacking on what Dan said earlier about if you're a sole proprietor, it was very difficult or almost impossible to get the 8-week period to be 100% forgiveness. This new split, where it used to be 75% of your payroll was had to be, or 75% of your loan had to be payroll, and 25% were other costs or could be payroll. The new split is now 60-40. So if you take those two things into consideration, when you got 24 weeks now, and now only 60% is required to be payroll, then it's much easier to fill up the gap with the 40% because you've got 24 weeks of rent and utilities and things like that to fill the 40. Now, remember, you must spend 60% on payroll or the forgiveness number drops. The Flexibility Act right now, the language says that if you do not hit 60%, that there'll be no forgiveness. But we have heard the interpretation from everyone on the government side that even though the law says that that is what we're calling a cliff, that's actually not the case. So before, when you look at the language, it said, hey, if you only hit 59%, you would have to pay all the loan back. It appears that if you hit 59%, then you will pay 59 divided by 60 of the loan back. So, or not, sorry, would be 59 divided by 60 would be forgiven, and only 1/60th would be a loan. So it's, that part is a little confusing because the language of the law specifically says if you don't hit 60%, that you're going to have to pay it back. But everyone who is interpreting that, everyone that is in there, Corey Gardner, the U.S. Treasury Department, says that that is not the case. So I'm actually expecting to see written guidance on that shortly. That makes that something that we can hang our hat on. But again, 60-40 is the new split. So you minimum 60% on wages, maximum 40% on other, which has been defined as mortgage, interest, and or rent, utilities. So so we'll talk about, actually, I'm gonna stop what I'm talking about and turn it back over to Dan.
Yep, good. We're going back and forth. It's a round robin, but we're almost done, and then we'll just answer questions. I will just add that there is actually in one of the recent guidance from the Treasury Department specific language that it's not a cliff. I mean, they give you a math example of that it's not a cliff, that it'll be a proportionate reduction if you don't hit the 60%. So even though the law doesn't say that, I mean, the law is pretty clear. They have done that in the guidance, and I think it can be relied on. One of the questions that we kept having throughout this period of time is, if I end up with a PPP loan, so I don't give it all forgiven, I end up with a portion of the loan, how can I spend that loan? Can I only spend it on payroll, utilities, mortgage interest payments, the qualified, or now is it just a loan and I can spend it on any business purpose? I will tell you that it was my interpretation that you could spend it on any business purpose. I didn't see anything in the guidance or the legislation that prevented you from doing that, but that was always just my opinion. Well, the new guidance makes it very clear that I was wrong. You can only spend PPP money on the designated usage, which are payroll, even if it's a loan, you can only spend it on payroll, utilities, rent, and mortgage interest payments. So that is very clear. There's actually a certification that they have added that actually reads that if you spend it for some unauthorized use, they will consider it fraud. So it's clear, and we were wrong on that, but now we have direct guidance, so we advise you of that fact. Brian, you have the last one.
Yeah, so now they've made some changes to the safe harbor rules, and the safe harbor rules have always been a little bit confusing. The good thing is that there's a worksheet on the new forgiveness application that clearly walks you through safe harbor. So that is good. So get the new application and walk through safe harbor and see if that helps you. But some of the big catches on safe harbor is if someone doesn't return to work and you can't hire someone with, or you can't hire someone with the same qualification, then you get to count them in your FTE count. And the other one is that if you can't bring your business back due to government restriction, then you get to modify your FTE goal. So we'll take a restaurant as a good example. You're allowed to open restaurants, and they have been allowed to open restaurants recently, but at a 50% capacity. So your FTE goal during this 50% capacity would be 50% of the FTE piece. So that safe harbor is allowing you to adjust your FTE match number based on a government restriction. So if they shut you down to 50% or 25%, then you'll be able to adjust your FTE based on that government restriction. So I think that encapsulates all of the new news. So let's turn it over to Jamie for questions.
You know, I'll jump in before Jamie asks us a question. I'll muddy the waters a little bit. You've made them so clear, and I like to stir them up and muddy them a little bit. So the example on the restaurant that if you cannot return your business to its former level because of government restrictions, that's definitely what it says. It's a little less clear on how you calculate that. So it's not clear in my reading that if you're limited to 50% capacity, you can say, well, I can reduce my FTEs by 50%. I don't think they've given us direct guidance on that math. I think you just have to come up with a defendable position, and I think they're going to want to try to accept it. I'll just say one more thing on the other new one too about hiring somebody with the same qualifications. I just had a client this morning who lost to engineer, who didn't want to come back to work, highly qualified person. They have not been able to replace him. They've been running ads, they've hired a recruitment firm, and they haven't been able to find somebody with those qualifications. And I just said, look, document that. Make sure you're keeping copies of the ads you run. Make sure you're keeping copies of your communication with recruiting officers so that when you get to the end of the day, you can go, look, we tried to hire this person, we just couldn't. And so we still get to count them as if they were there. So just those couple caveats. And now Jamie can ask us questions.
Thank you, guys. I know things are quite complicated right now, and we have a lot of questions. Some of them are clarifying. Some of them I know have been addressed in previous webinars that you guys have done. So if we want to refer people to those, I think that's fine too. But I'll start getting into this. Okay, so there's been some questions about the FTE equivalent. So they're just not quite sure how to calculate it. So I guess if you can expound upon that, that would be helpful to a lot of the people here. There's been quite a few questions about that.
Sure. Brian, do you want to? I'm happy to jump in.
Yeah, well, sure. The FTE equivalent basically requires that you calculate 2 periods. So you need to calculate what I call the base period, which is going to be the number that you need to match. And there's several different ways to do that. So you have, if you're a seasonal business, then you have 3 periods that you can choose from. If you're not a seasonal business, you have 2 periods that you can choose from to create your FTE match. So seasonals get the added period of between May 1st and June 30th of last year. They can pick any 12-week continuous period and calculate the average FTE for that period, and that becomes their base. Or for all businesses, you can choose from February 15th to June 30th last year to calculate your average FTE, or January, February of this year to calculate your FTEs. So that becomes your base period. Now, what we're looking at with the new application is it appears that you would calculate your average FTEs over the covered period, whether you're on the 8-week or the 12-week period, and you would compare those numbers. If your FTEs on your covered period is greater than the base period, then you're good. If it isn't, then you need to look at the safe harbor rules. And I'm going to let Dan cover safe harbor rules because I'm confused.
I'll jump in a little bit too. And I think you just misspoke. So it's that 8-week or the 24-week covered period. You said 12-week.
24.
There's just a lot of numbers thrown around here, so I know how confusing it gets. Yeah, and my reading of the new application that just came out is if you choose the 24-week covered period, you have to calculate your average employees over that 24-week covered period. The next part of the FTE calculation is what's an FTE. How many FTEs do I have? And the SBA has given you 2 different methodologies from which you can choose how to calculate what an FTE is. Now, once you choose which one you're going to use, you have to use it consistently between your base period and your covered period. But you can do the math, and there's advantages for different people which one to use. So you have to do the math and figure out which one works to your advantage. Those 2 methodologies are, the first one is what we might consider a more straightforward one. So they consider an FTE somebody who works 40 hours a week, and anybody who works less than that is a portion of an FTE based on how many hours they work per week. So somebody who works 20 hours a week on average, 20 divided by 40 would be 0.5, so they're a 0.5 FTE. If they average 10 hours a week, they would be 10 divided by 40, they would be a 0.25 FTE, although you round to the nearest 10, so they're a 0.3 FTE. So you can calculate for everybody based on that. Somebody who works 2 hours, you could calculate that they're that fraction of an FTE, and then you could add all those up to get your FTE. So that's methodology 1. Methodology 2 might sound simpler, and it'll be advantageous for some people, but disadvantageous for other people. Methodology 2 is that everybody who works 40 hours or more a week, nobody can be worth more than a 1 FTE, even if they work 80 hours a week under either methodology. But so methodology 2, everybody who works 40 hours or more counts as 1. And everybody who works any amount of hours less than 40 counts as a half. So if you have a lot of people who work 1 shift a week, 8 hours a week, under this methodology, you can count them as a half an FTE. Now, conversely, if they work 30 hours a week, you back it out and they only count as half an FTE either. So which one works best for you really depends on your circumstance. You need to run both of those numbers to figure it out. And then Brian wanted me to touch briefly on the safe harbors. The safe harbors are those rules. Some of them we covered before, and I may not have them fresh in my mind, but you can count certain people as FTEs who aren't really there. People who refuse to come back to work, you can count. You may have to turn them into the unemployment agency, but you can count them. If we mentioned before, if you can't find somebody who's qualified for the job, you can count them. And then you have this safe harbor date. it kind of made, well, it still makes sense. It used to be that you had this safe harbor date that if you couldn't get your FTEs back up during the covered period, if you got them up by June 30th, back to their historic base, you say, yeah, but I got them by here, so I'm safe. I get to say that I didn't have a decline. Well, the June 30th date has gone. The concept still happens. There's a safe harbor date upon which you can get back to full FTE, but June 30th is gone. The date now is the earlier of December 31st, the end of the year, or the date that you fill out your forgiveness application. So that's going to be a choice again that you'll have to make, which one works best for you, but that'll be a safe harbor date. So if you don't get your FTE fully back up over the 24-week period, if that's what you choose, but yet on the day you fill out your forgiveness form, you've got the FTE back up, you'll be able to choose that date and get a safe harbor.
Yeah, and I wanted to add that before, the guidance on the calculation system was a little bit nebulous. So I actually had advised some clients that they could, in the previous period, use one system, and in their covered period, use a different system that might be more advantageous. And now with the new guidance and the new application, it's obvious that that guidance that I gave out was wrong. It is very clear in the application that, as Dan said, whatever calculation method you have to use for the base and the covered period.
Great, thank you guys. Hopefully that clears up some of people's questions on that. So then there's also questions about contractors, 1099 employees. So let's see, there's a question about, can they use PPP programs for companies that pay individuals through invoices rather than payroll? I mean, these are pretty similar, but let's see, there was one other I wanted to call out. Let's see where this one went.
So while you're looking for that one, I'll jump in with a hazard on that last one. So if you're paying them through an invoice, you're paying them as an independent contractor. They're not on your payroll, and you're not withholding employee and paying employer taxes on that. So the answer is no. They're an independent contractor, and they would have to file their own PPP. They may be able to file their own PPP, but you, as the company that's paying them, cannot file a PPP on their behalf nor pay them with the use of a PPP. That's the company, that's only for your employees, your W-2 wage earners.
Okay, yeah, that covered the other one I was going to ask, so thank you for doing that. So this person has a question about collecting unemployment. So they're wondering if they've been approved for the PPP, can they collect unemployment until the end of July and then access their PPP funds? They realize they can't accept both at the same time, but they're wondering if they can do one and then the other.
But we talked about that.
We've had lots of discussions about this particular topic, and this is a piece where now with the new Flexibility Act, it doesn't seem to be anything that doesn't allow that. You would have to basically sequester the PPP money and not spend it while you're on unemployment, and then declare a PPP start date after you come off unemployment. We don't have any guidance to the contrary. We don't have any guidance that says that that is okay either. So the reality here is a talk with your banking institution to get their take on this guidance. I'm interpreting it as, yes, you can do that you can stay on unemployment and start your PPP period, your 24-week period later. But my concern is always, if you do the 24-week period, if you count backwards from December 31st and you're using the entirety of the 24-week period, then your start date would have to be July 17th. I don't see anything that would allow you to push beyond that date arbitrarily to take it all the way to July 31st on unemployment. And I know Dan may have some input on that as well.
Yeah, I'm just going to say that yeah, under the former rules, when you had to spend all the PPP money in 8 weeks, it was essentially impossible for you to do that, because if you were going to get forgiveness, you had to start spending that money now, and it was going to be exhausted during that 8 weeks, and you clearly could not collect unemployment while you were paying yourself with the proceeds from a PPP. Now that there's a 24-week option available, it does make it mathematically possible to do that. The caution is the intention of the bill. The intention of the bill was to keep people off unemployment and keep them working. So by now taking advantage of what mathematically is possible, you are flying in the face of what the intention of the bill was. There's no clear guidance on this. Right now, it seems possible to do. Will I be surprised if somebody comes out later on and says, no, you can't do that? No, I won't be surprised. We haven't seen that, and maybe they never do. So I think you have to, the best advice we can give you is, yeah, it's mathematically possible. We're not sure if that's going to stand up long term. You have to do your own risk reward assessment and make a judgment call.
Great, thank you guys. So people are wanting to know if there are additional updates to the EIDL loans and what the process looks like for that. I know a lot of people have been waiting a long time to get information. So if you have any updates there, I think that would be helpful.
Yeah, well, I don't know a whole lot new. I have a client that I'm dealing with that signed all the documentation on the same date as another client. Client A received their EIDL funds, client B did not, even though they both went through exactly the same process. So client B that didn't receive his money called, and the person who answered the phone at EIDL or SBA said, yeah, it could take up to 30 days to get your money, although we're not seeing that as a normal response. So that client went back and checked their deposit information, made sure it didn't go to the wrong account. All of that seems to be in line, but they still haven't received their money. So there does seem to be some unexplainable delays for certain clients. But, you know, my experience with the EIDL loan is not much has changed. It's very difficult to get information. There's the numbers that you can call to get information seem to be changing. There was a number that we were calling and getting good information, and then now that number doesn't work anymore. So you know, be patient and persistent, but I don't know what else to say about EIDL.
I'll just say the good news, and maybe everybody knows that, but that was just released Monday, that they have opened up the application window again. So the program was out of money. They were not accepting applications for a period of time. They have opened up that window again. So if you did not apply for an EIDL loan, and if you wanted to apply for an EIDL loan, you can get in and get in quickly. It's generally a pretty favorable loan instrument. It's 3.75% interest, which is, you know, compared to what prime is probably right now, it might be high, but it's below what most of us as a small business person could borrow at. It's amortized over 30 years, and it's deferred. The first payment is deferred for an entire year. So your payments don't come due very immediately. There are restrictions on how you use that money. It's defined as a working capital loan. So you have to spend that money on normal operating expenses. Now that's a pretty broad category. So as long as you're careful, it's not going to be too burdensome in my mind to prove that you spend it on working capital. People have been worried about the documentation you're going to have to provide, the amount of information you're going to have to give to the SBA. I don't think it's oppressive, and I think it's going to be less for most people than they assumed. There is the risk that you get audited, and if you do something egregious, you'll run that risk and increase that risk, and an audit's never fun for anybody, but for the vast majority of the people who get an EIDL loan, The bookkeeping is going to be pretty modest, not far outside of what you have to do in an ordinary course of business. So it's going to be a pretty easy loan. So if you do not apply for an EIDL loan, I would apply for one. Now, apply for one. In order to get an EIDL loan or a PPP, you have to have suffered economic damage. So if you have a business that's doing better now than it was doing pre-COVID, you don't qualify for either one of these loans. And if you apply for and accept one of these loans, you're committing fraud against the federal government. So you have to have economic damage to get either one of these loans. But if you do and you didn't get in and you want an EIDL loan, I would get into that lending window as quickly as possible.
Great, thank you both. So you addressed interest for the EIDL loan, but people are asking for the PPP loan. When would that interest start?
Okay. So as what I've read in the interpretation is the interest starts the day that you receive funding. So if the loan is forgiven, it is forgiven and the interest is forgiven. If it is not forgiven, then the interest is retroactive to the funding date. So remember then, so we'll just take a simple number. If you took $10,000, that's 1% interest. So that's going to be $100 that's going to get tacked on at the end of that first year. So even if you didn't get any forgiveness, then your loan over a 2-year period would end up being a little bit more than $10,200 in payback divided by the number of payments that you would make depending on when your payment period starts, based on what Dan briefed earlier on the whole deferral in terms of when you apply for forgiveness and when forgiveness is actually ran through the bank, because they have 2 months to respond and the SBA has 3 months to respond. So however many months are left after that from the day you got your money, either 24 weeks out or 24 months out or 60 months out, depending on whether you're in the 2-year or 5-year period, would be that number divided by the number of months you have left in terms of payback.
Great, thank you. So a lot of people are asking where the new forgiveness paperwork is.
Yeah, we can share that website. It's on the one we always go to. It's the United States Treasury Department. I have it open every morning in my thing. It's treasury.gov. There is a link there, assistance for small business. So it's the United States Department of Treasury's home site. They have a page. We can share the link, I'm sure. It's called the CARES Act, provides assistance to small business. And on that page, you will find all the guidance that they have issued throughout the course of this extended period. And you will find there the 2 loan forgiveness applications, both issued today. Oh, they actually have a date of the 16th on them. They must have issued them late yesterday because I didn't see them until today.
Right.
But you'll see those 2 there. There's an easy one, and then there's the regular one. So
Great,
Jamie,
thank you. And we will.
Yeah, you can share that.
Yeah, go ahead. I was just going to say we will share that in the follow-up email tomorrow. So if you have any trouble finding it, it'll be linked in that email. Okay, so there is a question if the $100,000 compensation limit is now changed at all. So they're looking at $1,923 per week times 24 weeks. So any changes there?
No changes. $100,000 cap, but now over 24 weeks. Unless you're an owner, if you're an owner employee, you are limited to 10 weeks, even if you of your payroll, historic payroll, even if you choose a 24-week period. So it's not going to help owner employees. If you're trying to count out payroll for a regular employee, they're still going to be capped at the weekly amount of $100,000, but now it's 24 weeks rather than 8. So it'll keep adding up, I think. I think I'm answering the question.
Yeah, and well, the other caveat is that if you have an employee that makes over $100,000 a year, then they are not subject to the 25% reduction penalty.
Okay, so this person is wondering if they can change the employee count. Like, could they call their bank and change the number that they had originally submitted?
Yeah, so the bank, the number that you originally submitted when you processed your loan has nothing to do with forgiveness. So when you fill out your forgiveness application, you will use the calculations that we mentioned earlier in the presentation by one of those base periods to come up with your FTE count. So don't worry about what you put on your loan, because when we all filled out our loans, those of us who applied, the terminology on what an FTE count was very nebulous, and almost every single one of us were wrong.
Okay, so this person has a question regarding the 8 or 24-week periods. They're asking if they can choose a date after 8 but before 24 weeks.
I'm sorry, they're asking if they can choose. So
basically, what's the time frame of when they can choose for the period?
Sure. I mean, the starting date is going to be set by the rules. There's two options in the rules for when your cover period is going to start. And that is going to be either the day that you receive the PPP funds, or if you pay biweekly or more frequently, then you can choose the start of your next payroll period after the day you receive those funds. So the only thing they're letting you do there is they're letting you line up your calculations with your payroll period. So that's when the time of the cover period is going to start. And those are your only two options. And then the end date is going to be either 8 weeks or 24 weeks after whatever that first starting date is.
Okay, I think that addresses the question. And this person is asking the timing for the 60-40 ratio. So they had a pre-June 5th loan. So they're wondering if they would still get the 60-40 ratio, or if it would go back to the 75-25.
Yeah, that change applied for everybody. Yeah.
60-40 applies to everybody.
Yeah, the only difference is where the pre-June 5th is, it's a 2-year maturity if you end up with a loan. And if you are pre-June 5th, you have the option of choosing the 8-week or the 24-week covered period. If you're post-June 5th, it's now a 5-year maturity if you end up with a loan, and you can only use a 24-week covered period. You no longer have an option to do it in an 8-week covered period.
So I don't know if this relates to most of this, but they're wondering if there's any funding available if they incurred expenses to modify their business to be COVID ready. So would that be EIDL loan, or do either of these cover that?
Yeah, PPP doesn't cover that. It might cover the labor used to do the modifications, but it wouldn't cover anything else. And this PPP is very specific about even the other costs can't be modification costs. It had to be something that existed prior to February 15th. So it would have to be EIDL money, and of course that would be general operating expenses. And if you pivot your business model because of COVID, then EIDL funding would be a perfect fit for that.
The only caveat there might be that, again, the EIDL money is, you're exactly right on PPP. The EIDL money is working capital money. So if you had to do a major physical improvement to your fixed assets, you had to put in walls and buildings and that sort of stuff, that may be considered a long-term fixed asset and not a working capital expense. So there may be some gray area there, but I know that, like the grocery stores have hung the plexiglass down. I don't know that I consider that a fixed asset. I think that might be a working capital thing. Certainly if you had to buy masks or hand gloves or those things, those are operating working capital sort of thing. So there may be some gray area if you got into really big fixed asset investments. So I would maybe talk to your CPA. .
Great. So this person is also asking about timing with pre-June 5th or after. So their PPP money was deposited on June 1st, but they're going to use the alternative start covered date due to the start date of their payroll period, which was on the 15th of June. So they're wondering if there's still a pre-June 5th qualifying
They're pre-June 5th. So the June 5th date is based on when the SBA granted your loan number, not when you elect to start using the funding. So it comes back to that when the SBA granted your loan number. So if you received money on June 5th or earlier, well, I would say June 4th or earlier, you know your loan number was granted before June 5th. If you received your money on June 5th or later, then you need to check with your bank to find out if the loan number was granted before June 5th or after. It probably only applies to people who are, June 5th, 6th, 7th, or 8th, but it's something that it's good to check to make sure that the SBA loan number grant date is before June 5th or June 5th or after.
Okay, so we have 4 minutes left, so probably ask 1 or 2 more questions. This one might be quick. Can an owner claim both W-2 wages and any draws that they take in the payroll calculation?
I say yes. So, there's very, very specific rules on how an owner can claim, and it's based on what their experience was in 2019. So if they want to take draws, our advice has been from the very beginning to pay that money in draws, but it has to be based on what was on their prior year tax return in the net profit column. If it was a net loss, then there'll be nothing that you could claim.
Okay, I think you addressed this before, but maybe we can just reiterate it. Can you apply for forgiveness at any time, like way before the 24 weeks are up?
Yes. Yeah, I mean, it's a pretty simple question. The new application talks about the date of your application for forgiveness. So, I don't know that anyone could apply until after their 8 weeks are up, because I don't know how you would spend the money to do that. But as soon as you're eligible for 100% forgiveness, then that should be your application date.
Great. So we have a lot more questions, but I think it's going to be tough to get to more of these. So I think we'll work on wrapping this up. So I really want to thank Brian and Dan for doing this today. There's a lot of things to sift through as things are constantly changing. So we'll try to stay on top of things and let everyone know as things continue to change. Dan and Brian are both consultants with the Boulder SBDC. So we are happy to connect you so that they can help with your individual situations. I know a lot of you have very specific scenarios that we weren't able to cover today. So we can do some follow-up on that. We will send out an email tomorrow with a recording of today's presentation. I will also include the link for the application for forgiveness so that you have that easily accessible. We do have 15 centers around the state, like Susie mentioned. So I know some of you are calling in from different locations. So if you go to coloradosbdc.org, you can find your local center, and that's where you can request consulting assistance. And we also do that at the Boulder Center. So we continue to do updates, and I know this is a tough time for everyone, so we're here to help. Susie, did you have any other closing thoughts?
No, just again, if you have specific questions or if you need a deeper dive or someone to explain a little bit more about what was mentioned today, just reach out again and ask those questions. That's what we're here for. And thank you, Brian and Dan, as always. We pretty much bogarted most of these guys their time, to help us get through this stuff. So, no, thank you. Thank you.
Thanks, everyone.
Yes.